Welcome back. Futures this morning ahead of the June jobs report out at 8:30 a.m. Eastern time. Pretty much flat across the board. The Dow indicated lower by only 19 points. Economists are expecting 225,000 jobs to be added to the economy, and the unemployment rate sitting at 3.6%. Meanwhile, the Wall Street Journal reporting Americans have, quote, quitting their jobs, and the rate at which workers are voluntarily leaving employers is approaching pre-pandemic levels. Joining me now is ProChain Capital President David Tawil. David, it's great to see you this morning. First, want to get your read on what you're expecting.
So I think the expectations are kind of where I'd be as well. I wouldn't be far off from the 225 to 250,000 ads. In terms of the quitting, I think we need to keep in mind a couple things. First of all, we had a once-in-a-lifetime surge in signing bonuses when there was a dearth of employees found, especially for menial and hourly jobs. I don't know if you remember, but restaurants and gas stations and all sorts of kind of entry-level jobs were offering incredible signing bonuses. Those have gone away, and so therefore quitting the quit certainly makes sense. In addition, a lot of white-collar jobs have started to take back the remote work option. And so people that were looking to go ahead and continue what was a pandemic luxury of being able to work remotely fairly often, if not exclusively, has also gone away. A lot of employers want their employees back in the office, and I think a lot of employers are no longer offering as much of an extensive option regarding remote work as they did.
Right.
And then finally, I would also say that pandemic concerns, simply health concerns, especially for healthcare workers, have gone down dramatically.
Well, it's more
people
than
are not as concerned.
3 years post-pandemic, so it's about time for people to start getting back into the office. But some of this data is a little disconnected and confusing. The jobs market has been the bright spot for the Biden administration. You had a strong ADP report yesterday. Looks like we might get a strong jobs number today. Investors are trying to look at this and look at the Fed, figure out, persistently high, sticky inflation, how the Fed's going to combat it. I mean, the market really sold off yesterday on that ADP number because it feels like rate hikes are on the horizon.
I think rate hikes are on the horizon, and I'll continue to say it. I've said it to Maria a number of times. I say we continue to go higher, but more important than continuing to go higher, let's say we go another 100 basis points from where we are right now, I think we stay that high for a number of years.
Yeah.
I don't think that the Fed is going to go ahead and get to its inflation targets very soon. I think it is going to take a long period of time. But, Jackie, that is okay relative to the markets. I don't think that that's wrong. The markets have been able to take this in stride. It is going to crush some very interest rate sensitive industries such as real estate. And I think we're going to see a multi-year, maybe decade-long fallout, first on commercial, and then we will eventually get to housing, Jackie, where there will be a fallout. Housing has been incredibly strong despite all of the turmoil going on with respect to rates, with respect to pulling in of the economy. And so therefore, I believe that there are certain sectors that you need to go ahead and focus on. I think tech will continue to remain strong. Housing and other interest rate sensitive industries are going to go ahead and lag.
But if I'm hearing you correctly, it sounds like you're saying that basically the market is absorbing this so far, despite some pockets of weakness that we may see going forward. And I think that's reflected in the exchanges and the moves we've seen in the first half of the year. But I want to get your take on Bitcoin as well, because it touched a 13-month high this week. Optimism, ETFs, that the ETFs and the creation of them will lift prices. Bitcoin currently sitting just around that $30,000 mark. It's a little bit lower this morning. David, where do you think we go from here with the cryptocurrency?
I think we could get to 50,000 by year end, and I'm not just throwing out a number. I think that the ETF story is important, not necessarily because the ETF flows are going to be a panacea. We've had ETFs in Canada and in Switzerland for some time now, spot Bitcoin ETFs, and they haven't been market changers per se. But if you have the likes of BlackRock, the world's largest asset manager, Fidelity, Van Eck, Invesco, WisdomTree, all offering ETFs in Bitcoin, but more importantly, getting behind the tokenization and the digitization of assets. This is going to be a tectonic shift for the use of cryptocurrencies to go ahead and represent ownership of assets.
Right.
And I think we are going to see that. That's a big technology theme. We're going to see that over the next couple of years. And as that picks up steam, as that storyline picks up steam, we're going to see incredible growth and interest in investing in the asset class. The correlation between Bitcoin and the NASDAQ has never been lower. And that's very important,
right,
because asset managers now recognize they can't get the exposure to Bitcoin simply by investing in the NASDAQ.
I think that's a great point. And obviously, we've been following the volatile moves. Maybe this story does pick up steam. We will be all over it. David Tawil, thank you so much. Good to see you.
Thank you, Jackie.